It's been a big year for RWC Western Sydney. 167 transactions across sales and leasing, totalling over 530 million. Despite ongoing challenges in the market across interest rates, construction costs and consumer sentiment, we've continued to deliver exceptional outcomes on behalf of our clients for a variety of asset classes. This report highlights what we've seen in the past 12 months.
With elevated interest rates, investors are chasing one thing: security. And when it comes to blending stable income and long-term capital growth, few assets deliver like built-form residential. These properties offer strong tenant demand, consistent cash flow and underlying land value that appreciates over time.
The team has successfully transacted over 54 million worth of unit blocks and boarding houses this financial year. Over 20 campaigns, the team have achieved strong yields sub 4%. Purchaser confidence is at an all-time high, underpinned by the current housing market shortage, replacement costs, increasing rental returns, and potential future development upside.
Backed by a proven track record, strong negotiation skills, and relationships with housing providers and active investor groups, our specialised team is result-driven in achieving the highest possible outcome.
Western Sydney continues to anchor New South Wales population growth, with updated forecasts showing the region will accommodate 56.52% of the state's growth through to 2041.
We're pleased to announce that we have transacted in total over $350 million in development site sales, orchestrated over 60 campaigns, and spoken with over 5,000 inquiries throughout the financial year.
These sites encompass a diverse range of asset types, including medium and high-density residential, subdivision sites, accommodation, industrial, childcare, and partially completed projects.
As we move into the new financial year, we anticipate even greater momentum across the development market. With strong underlying fundamentals, yet to be satisfied housing shortage and renewed buyer confidence, we believe that the market is on the rise. And RWC Western Sydney is well positioned to help our clients capitalise on them.
Western Sydney's industrial market remains one of the most resilient and active sectors across all asset types, from established warehouses, land to strata units. Over the past financial year, our team have transacted over $73 million in industrial assets and fielded more than 2,500 inquiries, of which over 80% are from owner-occupiers.
This level of demand highlights the ongoing strength of Sydney's economy and the crucial role industrial space plays in it. With land becoming increasingly scarce and the urbanisation pushing traditional industrial zones further out, buyers are now more flexible with their location criteria. Any site near Sydney's major motorway networks is now hotly contested. Through our campaigns, we have seen land transact within the vicinity of $1,500 to $2,500 per square metre, and building values exceed $7,000 per square metre in certain locations.
Despite the leasing market slightly softening, with vacancy rates starting to stabilise, occupier demand continues to be the prime driver behind the robust industrial market values. With interest rates easing, we expect investor activity to return and demand to climb even higher.
Retail is back in focus, driven by interest rate cuts, economic stabilisation, shifting consumer behaviour, and the resilience of essential service-based tenancies.
Over the past year, we've seen consistent demand for both freestanding retail investments and strata shops, with buyer profiles being predominantly local businesses, but also extending to private local investors to family offices. Fun fact, our team have seen an overall increase in purchasing inquiries, which have seen a 66% overall increase per campaign, highlighting the resurgence of market interest in retail assets. The team have also found success at auction for the retail asset class, achieving an 80% clearance under the hammer, which is extremely strong given the current market climate.
Yields have remained competitive, but vary vastly between locations and sometimes disregarded when acquired by an occupier. Retail is evolving, but strong fundamentals remain. Our results reaffirm that even in a cautious market, buyers are still willing to compete for assets with the right fundamentals, and location remains front and centre of that equation.
Childcare continues to be one of the most looked at asset classes, driven by strong population growth and continued government funding. New South Wales forecasts to grow over 9 million people by 2036, with more than 100,000 births each year. This growing demand for early education is a positive sign of a strong, stable economy.
This financial year, we're proud to have transacted over 86 million in childcare assets across both development and investments. These campaigns also received the highest number of average inquiries per campaign than any other asset class. On average, sites traded at 33,000 per place, with investment yields sitting at a sharp 4.93% average. The desired number of places remains between 70 to 100 children.
Our in-depth knowledge, strong track record, and trusted relationships with childcare operators ensures our clients are always in a position to make strategic, well-informed decisions. In a tightening market, childcare stands out as a secure, high-growth investment.
At RWC Asian Investment Services, we excel at leveraging our extensive network and cultural understanding. We offer a seamless experience for Asian investors looking to enter or expand an existing presence in the Sydney commercial market.
With team members who speak more than 6 Asian languages, our team is uniquely positioned to facilitate commercial property needs from sales to leasing, as well as management for our Asian clientele. In 2025, we're pleased to announce our latest member, Tim Ko, which extends our capacity to cater to the Korean community also.
Across the past financial year, the AIS team with our multilingual expertise spearheaded negotiations, leading to a total transaction value over 200 million across multiple asset classes. These transactions include achieving premium result for some of the highest profile assets.
As global capital continues to pivot, Australia stands out as a key destination for Asian investors. With deep market knowledge, cultural fluency, proven results, the RWC AIS team remains committed to guiding our clients through every stage of their commercial property journey.
Across New South Wales, we manage more than 300 properties collectively valued at over $1.2 billion. Our commitment to excellence is reflected in a 95% tenant retention rate and a rent arrears rate of just 6%, showcasing our effective and responsive management approach. With over 20 years of experience, our asset management division expertly oversees a diverse portfolio encompassing industrial, childcare, healthcare, retail, office and service station assets.
Leasing remains active across the board. Retail is thriving, especially in neighborhood centers, where leasing activity has jumped by over 200%. In industrial spaces, smaller units under 500 square meters are leasing fast, but larger space with big office areas are facing some pushback. And in the office sector, confidence is making a comeback. Small businesses are moving into office under 100 square meters, taking advantage of low rent and generous incentives.
We'd like to thank you all for your continued trust and support. As we head into FY26, we remain focused on delivering results, creating value, and leading the market across Western Sydney. We have a huge amount of belief in the fundamentals of Western Sydney and are extremely excited about the year ahead.